I recently found out that a Kiwisaver returned over 100% last year. In fact, it was 116%. This is crazy returns and totally unheard of, as fund managers year on year fail to even get 10% a year. So in this video, let's look at how it achieved this, if this is easy money, and go exactly what you need to know when picking a Kiwisaver fund manager. I also want to talk about the hidden truth behind retirement, the shocking facts to achieve this, and at the end I will share my own Kiwisaver balance. Reading into the article, the best performance over the year in the quarter was Cora's cryptocurrency fund, returning 116% a year. So straight away from this, investing your Kiwisaver in cryptocurrency is significantly riskier compared to traditional funds. Cryptocurrencies are highly volatile, with prices that can swing dramatically in short periods, making them unpredictable. Unlike traditional investments into Kiwisaver, which are diversified and regulated to provide steady growth and security, cryptocurrencies lack regulation and can be susceptible to fraud and cyber attacks. Additionally, the complexity of managing digital assets and the speculative nature of the market can jeopardize your retirement savings. Therefore, traditional funds offer a more stable and secure approach to long-term investing. So I am not opposed to cryptocurrency, I just think it should be managed, and if you have something like Kiwisaver, the average person that invests into Kiwisaver and doesn't have a lot of knowledge about the markets, I think is really dangerous, because if you're expecting Kiwisaver to be there for your retirement, then investing it in cryptocurrency can mean that it could, potentially go to zero if the whole thing crashes, right? Instead of something like the stock market where it can crash down, but then it will make its money back up again, because that is how the stock market has been for the last 100 years. There's just not enough history for cryptocurrency, but I'll talk more about that in the next slide over. So here is a list of reasons why I would not invest into cryptocurrency as a retirement plan. I don't know about you, but I want to invest into a safe, broad, diversified global fund, so my balance is likely to keep going up over the long term to end up with a retirement nest egg when I'm 65 years old. While it's obvious to everyone that the returns this new currency has extraordinary returns, it's relatively new and something I don't want to take a chance on. I'll take risks elsewhere, but not in my retirement fund. And I definitely do not want to be depending on government money when I'm old. I want to have my own cash reserves so that I can have a retirement fit for me. Before going any further, for those new to Kiwisaver, Kiwisaver is a retirement saving scheme in New Zealand designed to help you save for retirement. Here are the main uses for Kiwisaver, which is number one, retirement savings. The primary purpose is to provide financial security for your retirement years. And number two, which is very nice that they've added this, is first home purchase. You can use Kiwisaver funds to help buy your first home after meeting certain eligibility criteria. However, note this will greatly reduce your final retirement end sum. Now this is quite good because people that are new to personal finance, including myself, actually getting a lot of money is good, but you also need somewhere to live. In the long term, you can then pay that down, and then the mortgage will be much lower than rent, because rent will always keep going up where the mortgage will go down. Obviously, you have to work the numbers out, and it's a lot more harder than what I'm saying at the moment, but take it from me, as someone who has paid their mortgage off and does not pay mortgage or rent, it makes me a lot of money because all my work money is saving into that. There is some costs, obviously, that you have to pay week on week, rates, services and that kind of thing, but they're significantly a lot smaller than paying a big amount of mortgage. So in this slide here are the benefits of Kiwisaver. Give it a quick read, pause it, and I'll put a link in the description for you to read. But anyway, let's move on because I've already covered this topic before. So what should you be doing when thinking about Kiwisaver? So let's get into the details and the numbers of what you might need. I can't tell you what your goals are, so let's just go over what is needed if you want to have a comfortable retirement. Number one is that you really need to have stable employment. You want to be working 95% during the ages of 20 years to 65 years to accumulate money at the end of your working life. Now this is just thereabouts, okay? If you finish university or if you finish studying or trade after 25, it's neither here nor there, but all I'm saying is that you should be working over those long periods of time to be accumulating money. So the next one is to have Kiwisaver to supplement your government superannuation, or more likely when I retire, there might not be very much of that or be very minimal. So this is where I think Kiwisaver can pitch in, as well as my own savings. Remember, this is just additional. You should be saving in the background money for your retirement as well, not just into these funds. And I know it's really difficult and it's easy for me to say this, but you've got to find a way to having extra money as well. The next one is obvious, is that you have to have a paid off house so that you have no mortgage or rent taking money away from your weekly retirement budget, because if you can't afford it now when you're working, imagine how you're going to be able to afford it when you're not working and you don't have an income and you still have to pay, somewhere to live. And also the last thing is sticking to a budget and being realistic about what your retirement is going to look like. Living is expensive when you're not not earning. So the main considerations are understand how much money you will have at retirement, what benefits you're entitled to, understanding what your budget will be, and know that you will need to do this for yourself to set yourself up for success. So let's now get into the real practical aspects of how much you're actually going to need and some examples in there, because that's how I learn and that's how I understand, and that's how I want to show you guys as well. So Mary Holm, or however you say it, has articles to give you ideas of what to aim for. This is great basic advice to get you thinking early of the true costs before you get there. This, however, is all assumptions. You can only predict how much things might cost in the future, but one thing is certain: the more money you have, the better. So give this article a read when you have time. It's full of great ideas. The best way, however, is making a budget of what retirement might look like for you. So all your numbers in Excel format, much the same way you do with the way you track your budget. So really, no one can tell you what you're going to end up, how you should be doing it, because you're the one that's going to be getting these numbers, and you're the one going to be doing the work to get these numbers or to get this amount of money. And I know it's really scary trying to understand this now while you're young, but if you have a plan towards it, you can actually work little bits every year into this so that you can actually get close to achieving these plans yourself. So not many articles state this, as they want to cater for all readers. However, I'm independent and I do what I want. So in my opinion, this is what you should aim for. So in my research and looking at successful people and where they work hard, this is what they do to prepare for retirement. Have your house paid off by retirement. The earlier the better, because as you can see from my channel, your investments can actually grow far quicker than they can with Kiwisaver, because you can actually invest better. You're not sort of reined in by the legislation or the rules that they have to adhere to. This year, Tesla went over 70%, which I was able to sell my shares and capture all those profits, right? While it's risky, I'm just telling you that it was so easy to make, $5,000 to $6,000 just like that within a year. And if you are paying off your house and then you've got a good 10 to 20 years to then build that retirement fund as well as Kiwisaver, then you're going to have plenty of money and life is going to be very good for you. And lastly, have a realistic budget at retirement. So while looking for actual numbers to see what other people do, in my research I found this report which I think is very helpful. So let me highlight some important information. So here on page 5, it shows what retirement looks like in 2023. This is a table format which makes it easy to read, to see that one person's household gets $496.37 after tax weekly, and two people get $763.64. So straight away we know to survive on this amount with no other assets, we would need to be living in a paid off house to have money for other things. If one person was living in Christchurch for only $500, if they were to rent out a place, it would probably cost them $300 or $400. That's not going to leave a lot of money, $100 every week to get your food, your bills and utilities, and then also try to enjoy some of that retirement, see your friends, family. There's just not going to be money left over. So this is why it's really important to understand this. And the next line down, it's broken into living a basic retirement or one with some comforts. Obviously that's why you have to save more money for. It also highlights that provincial areas like rural needs less money versus your bigger cities. I know already retiring in Christchurch would be much cheaper than say somewhere like Auckland. You can also see it's best to have a partner at retirement and to share your bills along with some company. Then you would just need an extra $400 a week to afford the choices budget living in a metro area. That sounds doable since it's only about $200 per person a week extra. So getting into more numbers, here on page 9 talks about how to fund this retirement, get you thinking about how much money it might cost, remembering this is only estimates. You can work out your own numbers by understanding your budget and what fits your situation. Again, highlighting it's cheaper if you live with a partner, and saving early really sets you up for retirement thanks to compound gains. Now, this isn't just me trying to scare you with retirement, and I know you're trying to live your life and trying to understand more, but this is really just understanding the long-term game of that eventually everyone does have to retire and you do need money. So if you're someone that hasn't been thinking about personal finance, the long-term, how much things are, this might be a good time to sort of start learning about it and really go through the numbers and get involved. So page 13 to 16 talks about budget breakdowns and examples. So yeah, give this a good read to really drill down on expenses, to show you what other people do and what's required for retirement. It's useful to compare your budget to make sure you have everything covered. Remember, this is just an example, right? So make it fit to you, but it shows you in detail what you actually should be looking into and then putting the effort in. So lastly, as promised, here is my Kiwisaver. So luckily I already own a house, so I won't need to take money out to buy a house, which means I can compound to a greater sum. As of December 2024, I have 64,900K, and it's a return of about 14% in total. However, if you can see there, what doesn't make sense to me, maybe you guys can tell me in the comments, is that I have $8,000 in returns, yet if you take away 64.9K from the amount I have put in, this doesn't really show I have 8K in gain. So I'm not sure what's going on there. Yeah, anyway, let me know if you know why. In summary, my personal opinion is that Kiwisaver is much safer in regulated funds. I know it's slow and boring, but this is the way to go because your money is always going to keep going up, right? It's not guaranteed, but if the last 100 years it's gone up, just like house prices in the last 20, 30 years, then it's more likely to than something like cryptocurrency, where you can double your returns in 1 year and then it could have a significant pullback. Okay, it's just, I guess it's just a risk. I need some sort of Kiwisaver money at the end of my retirement. You might not. If you've got some money already or you've got other plans, then that's fine. But for the average person that doesn't know much about it, safe regulated funds is the way to go for Kiwisaver. Anyway, thank you for watching my video. Click this end video if you want to see my best Kiwisaver video. That is here on YouTube for New Zealanders, but if you're from another country, it's good to see what we do in this country. If you got any questions, pop them down below. I've got referral codes there for my different platforms. If you want to support the channel, come join me over on Instagram. If you want to message me, I post there every other day about my stock portfolios, just other ideas or market news that's there. Like and subscribe if you're interested in this kind of content from someone from New Zealand. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. And I'm growing my stock market portfolio here. In total, it's over $100,000 now, and I started in 2020, just after the pandemic. So have a look at my other videos, and yeah, thank you again, and I'll see you in the next video.